hope everyone's doing well and welcome back to another video. So cool. This is the sort of, long awaited trade breakdown. First of all, I'm going to be making, a couple different videos today, but we'll start with this, right? I believe I sent a trade into the main chat on, must have been, today is the 26th, I believe it's on the Thursday, possibly. Let me just double check. Sorry, as I probably should have checked this before making the video, but cool. Yeah, so on April 24th, we were looking for a separate setup, right, which we'll also talk about, which is on the Thursday. Friday, we did not trade, and on the Wednesday, we caught an actual setup on the DXY and on GU. So cool. If you guys remember, if you've seen in the chat, if you haven't, I would go to the main Telegram chat. You see I made a little squiggly line drawing. It's always nice to see those play out when they play out accurately. But essentially the bias for the day was a high DXY, and it was based around this main swing point that you guys can see here, right? So let's set the context for the day. First of all, did we have any red folders? No. What was the sort of expectation for the day? So we knew on the Wednesday we have a few red folders in London, but we weren't really interested in trading London. And we know we had a couple in late New York going into London close kill zone. So when we look here, the area we were specifically looking at was this 4-hour fair value gap. Wanted to see price hit this. And if we drop another time frame, actually, you guys will see that price very, very slightly, tags the fair value gap, displays this higher. Now you see here, right, a lot of people may think, oh, this is in, London launch and it's not valid to an extent. That's completely understandable, right? What it is the way this candle closes, regardless, in London lunch, will set up the next candle. Just because, right, it's London lunch and the candle closes like this, which is obviously a very, very clear swing point, doesn't mean that we say, oh, London lunch, we're going to go run that low again. No, the likelihood is that this is probably still a swing point. It's just when you didn't expect it. Now, me even saying this, you guys probably, you can probably think of other examples where sometimes New York has opened, you've come into the session, you get a quick retracement into a range created by London lunch. From there, you get continuation and boom, it expands, right? Which is exactly what's happened here in the session. Now, right, past that, what we knew, especially as I came into the day, where London open kill zone is finished, is that, oh, clearly we're in a consolidation, right? Building a nice range here. We've got a big range here from low to high, and we know we have a high time for a PD array to retrace to. So now price can retrace to this, hit this, displace away, then it becomes a textbook setup, and that's exactly, what ended up happening at the end. So what we were looking for, right, once price had hit that going into the session, we saw a nice swing point, move away. Now what do we want? Right, how do we want to trade this? The way we viewed it was a 15-minute OTE. The entry was quite quick, if I'm being honest. I believe the wick goes up to about there. Yep. Yeah. Cool. Now you guys can see it's very simple from here. It's nothing complicated. The entry that I managed to catch was, literally just dipping into below the 0.5. And from around here, we went like this, stop loss at the lows, target at this, right? That's the high you expect to see. Delivery to now the RR on the DXY is great. Not bad at all. Past that, if somebody was still in, they could have held to that target. This cluster profit buy side here, I think, was also a very, very nice target. And the setup in itself, I think, on the DXY, extremely, extremely good. I think this is a super textbook setup. You have a nice, expansive range. Have the accumulation within the range, you have the array sitting there, price hits the array, you get displacement away, you've got the fair value gaps printed, prices then come, retrace, giving you that OTE at the right time of day in your New York session. Price then, I know, from the entry, I know it was a little bit choppy, it stayed a bit sideways, but as we got closer to that, news gave an absolute kick up for the news and past the news, went and hit the first target straight out, and then passed that bit of retracement, and then again hit the next targets as well, right? So how did this match up for the actual setup we took? Because of course we don't trade the DXY itself. Now, what's actually happened is that we've ended up on the wrong side of EURGBP, fortunately. You guys would have seen, as I said in the chat. So roughly, right, that setup is on a Wednesday. Yeah, here we are. What I wanted to see, right, the candle that we are within, so 1 to 5, trading 7 to 10 yield, right? So we are trading primarily in this candle, right? And what I expected to see from price initially, right, was price retracing higher into this range before we get a drop, right? I knew, of course, overall we are bearish on the euro, right? And we want to see price will trade lower, and we want to be, you know, short in the pair that is going to be weaker at the time. But the issue became here where we know we're in a consolidation, and it looked like price had, you know, sort of traveled to these lows if we take these wicks, and then started traveling higher. So my expectation at the time, which is of course an incorrect read on price, is that from here we are in the discount, and from here price will trade higher into this premium, and then maybe we'll get the kick down. What actually ended up happening, right, we've entered the trade, EURGBP is consolidated, so both pairs are actually moving okay, EURGBP and GBPUSD. But as the actual trade began to move, as we started getting, the big kick on the DXY, that one big candle around the news time you saw, is the same time we got this big kick on EURGBP, which completely sent EURUSD bearish, which is, you know, what we were doing, we were shorting, and sent, you know, gave GBPUSD a lot of resistance. So we'll quickly compare the charts, right? I don't think this is this may be the setup actually. Let's see. Is this on a Wednesday? Yeah, this is the setup. Cool. So as you guys can see, right, similar to the DXY, you've got that, you know, bit of a kick on price from that range of under lunch, OTE into the fair value gap, taking the trade. And what's actually happened here, right, very interesting, the trade that we've taken actually isn't in the premium. So when I've hit this, right, when the trade's initially been entered, what I'm seeing is that clearly the euro is getting stronger and the pound's getting weaker, because the pound was struggling to retrace. It was struggling to go OTE roughly when we've got into the setup, whereas the DXY was already in the discount. So now it's like DXY is in the discount, need to hit the entry. Which pair is looking weaker? Which one would I rather short? So at the time of entry, it looked a bit more obvious that GU, right, is potentially offering some sort of SMT here, and based on EURGBP, it looks weaker. And then what's happened is, you know, of course, prices then still, you know, traveled into the OT eventually, traded lower, and then from there, the target was this low, has come and hit that low. I believe the actual RR was about a flat 1. For me, it closed at around 1.1. Assuming people entered at a similar spot, it would have been around the 1R mark, which is nothing to complain about. It's still good. But when the DXY has now moved 3 to 4R, and it's moved very well, it becomes frustrating, right? And if we switch over to, right, EURUSD, don't think this is, oh, they might be the same time. I believe I was going through the comparison with someone quickly. Friday, Thursday, this is the Wednesday. Okay, cool. And now if we look at the shorts here, essentially the shorts you would have framed on the EURUSD were from that long, not that long, that high to this low. And let's just assume you hit the OTE at similar time. I believe it would have been around this candle. Let's just, you know, benefit the doubt. Let's say you took equilibrium, stop loss at the high, and then take profit, you know, roughly. Technically, the obvious target would have been this low, but we can see this low was even hit out. What I would say instead is, let's assume you based it off the DXY. You would have closed the setup around here, right? You would have closed. So this is when the DXY actually took that buy side liquidity as London close on was starting. Let's assume when DXY hit that, you close the trade. This would have been 3R. So it does hurt a little, right? 2R difference is nothing small, but it happens. It happens. Guys, there's other times, right? With situations like this, I always like to think of it as there's other times you're going to pick the pair and you're going to be on the right side and it's going to smash it for you, right? Sometimes it's so much so that the DXY might not even move, but because you pick the pair that is stronger or weaker at the time, you know, it just goes your way, essentially. So not the end of the world. It's not the worst result. If it, I guess, ended up being a loss, it can sting a little more, but you know, it's just something to be a little bit frustrated about, but nothing major. The reasoning there, I broke it down to you guys, is in my eyes, it was valid. If I saw that same scenario again, the likelihood is that I would favor the pound again, especially at that point of entry, which is the most important sort of point, because everything that happened after that, again, is happening after that, after you're in the setup, right? So it's hard to sort of switch around. I guess the trade-off could be, and some people do this, I have done this at times, if you're extremely unsure, you can split your risk and just hit a position on both. Hit a position on both EURUSD, GBPUSD. It's a little bit more headache, a little bit more management, but it's not the end of the world. It essentially, you know, it essentially assures you'll get like an average of the two positions. If one outperforms the other by a lot, then you sit somewhere in the middle, right? And if they both perform, then it's great. And the likelihood of them both not performing is not bad. So when I say that, I don't mean, you know, go risk 1% on each, just split it 0.5, 0.5. If you slightly favor one more, do like a 0.6 or 0.4. But I wouldn't play around with the numbers too much. You can just get very, you know, turn into a headache itself. So now, cool. The second trade breakdown, much easier and simpler one, right? Now, some people may not have caught, fine, right? It happens. Let's get rid of this. What we see now from this array, right, from that specific day, price has tapped that, moved away, and what ends up happening is now you've got a new low and a new high to you. So we've come into the Thursday, right? And as we come into the Thursday around New York session, which is around here, New York starts, price is sitting at the OTE. So what I've said to everybody in the chat is I'm happy to hit it from here. So this one wasn't posted on the main chat, by the way. You guys might be confused. But essentially what I've said is, look guys, we've got a very obvious range. We're in the OTE. Let's hit it like this. Right? We've got stop loss at the low, right? Entry was approximately there. And target would have here, which is previously had a very solid 2R, right? Nothing crazy, you know, it's still solid. Now, why use the 1 hour range? Why have this sudden switch instead of, you know, waiting for that intraday position? Well, one of the main things is just security, right? In a bullish context, right? Not looking at a 5 minute, not looking at the 15 minute, this is the most obvious swing low in the market, right? Right, to be bullish towards this target, I do not expect this swing low to go, right? I expect this to stay intact for price to hit this target. And what's happened is, as you guys can see, price moved towards that target, didn't even move towards the swing low, right? But we actually got stopped out on this position at break even. I'll talk about that in a second, right? But using that 1 hour OT when you have an obvious target in reach is a very, very secure way to get into a position. This is a sort of position, right? Understanding that it's a bit of a swing, I have more time to, I'd potentially risk 2% on. If the context of my account, and what I mean by that is, you know, I'm not in drawdown, I'm not at break even, made a bit of profit, you know, I'm willing to play with it, or potentially risk a bit more, maybe 1.5, maybe 2%, right? It's not about, it's not bad at all when it's this textbook, when you have that nice little range. And of course now, you know, bringing it back to basics, when we have the low, we have the high, we have the range, this is clearly a bullish range. So for you to, you know, take the OTE like this, take the entry like this, where you're taking a discount entry, very simply what we're saying is this is the target, this is, you know, the invalidation point, and it's simple as, right? It makes it very easy instead of, you know, playing around the lower time frame, you're waiting for that little move away and then the displacement and whatnot. So when opportunities like this are given, they can definitely be mixed in with the intraday trading. So cool. How does this shape up, right? I believe this one was when EURUSD now. Here you go. Okay, yeah. Lost there for a second. So this is the range that was made on the Wednesday. What we wanted to see from price. Of course, inverse to the DXY. Shorts here. Shorts were taken roughly and up to about 7, going into New York, roughly around there. Stop loss here. And the main target that we were looking for was back down here, right? So very similar to DXY, 2R, it would have lined up with DXY previous weekly high, but of course we did not get that move. Price instead consolidated. So how do we manage this position right now? Let's just look at this very simply put. 15-minute time frame will drop down to here. So this position is taken on the Thursday. We've taken it in New York. It started to move away. I've said to everyone, like, this is the range. This is the current, what we call dealing range for price. I don't expect price to violate this, right? So let's just see, even out of session, once New York is gone, let's just hold it. Let's see what happened, right? And what's happened is now, price hits us in, moves away. Retracement, moves away. And when this big move happened going into London close kill zone, the idea here was, look, I think price from here is going to, expand. So now when price has done this big move, what I've said to everybody is, let's cover this main swing high. This first swing high that was made brought the risk down, right, significantly. So let's just say, so now it's 12 pips on the table. Initially, it was 56.4, right, pips. Let's just, round that. That is roughly the risk coming down to about 0.2%, even under that, I believe, right? So now, 0.2%. Now, when price has now retraced, right, it's come back to the entry point, not gone to our sort of stop loss high, and then started to make this little move away again. But I've said, okay, guys, let's make another trim on the stop loss. We've got a little high here we can cover, or if you guys want, just go break even. So I'm assuming most people cover the high. If you cover the high, again, now the stop loss is 4 pips. That's negligible. It's probably just under a 0.1% loss, something like that. But some people, they would have gone break even, taken no loss out. Because as you can see, price, again, traded higher, took that out, and then traded away. The same sort of bias was set for the following day, meaning when we went into the Friday, we said, there's a likelihood we can see continued shorts. But of course, at some point, you just realize price doesn't want to leave the range. It's building accumulation. It's being choppy. It's likely setting up for the following week. And, expansion for this week is done, which happened to be the case for the early day on the Friday. So it became a bit obvious price isn't going anywhere. But yeah, guys, that's with that second example, the main thing that I'm trying to show here is that there's an advantage to trading the slightly higher time frame. If you can adapt to the 30-minute and the 1 hour intraday, you can still get opportunities that move within the day. You don't have to be holding for too long. But if you're very well positioned, you could hold across, you could hold overnight, hold into the next day, potentially hold for the next couple of days. Let's just say theoretically, right? I don't know. Let me try to find a quick example. We're going to have to cherry pick something out. You hit like, okay, I'm not sure if this one is OTE. Yeah, just about OTE. Okay. We'll treat this. Let's assume you took this Euro USD short, right? You're trading on a slightly higher time frame. Let's see, hit down at equilibrium. Stop loss there. And you have a obvious target for previous weekly low about here. That's 2R. Now, of course, come back to, I think if you wanted, you could risk a bit more on it, however you want to play. But the idea here is, right, we know that in the short term, we are bullish on the DXY, bearish on the Euro USD, and we have an obvious swing point here, which is, of course, a daily swing point as well. And you have an obvious target here. So imagine you're well positioned in this. That's what I mean by well positioned. Essentially, you've entered relative to an area of invalidation, right? Entered in a safe spot. You've got equilibrium or premium entry, stop loss at a safe area. Price has then moved away, and you now also have a good target. That means you can hold. Now imagine, right, price has moved away. I would assume after this big move that if someone took this position, they would just go break even or cover the high here. That's probably, again, very similar, like 0.1% risk on the table, maybe even less. From there, if you truly wanted to, you could hold that position for quite a while. You could hold it into like somewhere like here, and your RR would go up, not by a crazy amount, because again, you are trading slightly higher time frame, so everything's relative, but it gives you that little push, little edge. But yeah, guys, that's just what it is. I think sometimes, right, and I'll be very honest, like even me myself, I'll post trade breakdowns, and you guys might see other people post them, and it's usually the good trades, the trades you get in, and they just boom, your way, everything's on point. I'll be honest, that's how the Wednesday one was, really and truly. So, but even little things, there's so many small mechanisms that you have to pay attention to, even, you know, just being on side with EURUSD or GBP that can meddle with your risk to reward, meddle with how you handle the trades, how you have to manage your risk, if something's moving a bit more aggressive or it isn't. So it's just always little details to bear in mind. But yeah, guys, this is just one format of the trade breakdowns. If you guys prefer me doing it a different way, if there's any feedback, any suggestions, let me know. But that is it for this video, right? So yeah, hope you guys enjoyed that. I hope you guys took away something.